Assalamu alaikum wa rahmatullahi wa barakatuh. I welcome you back to the CTY group of schools e-learning program for the senior secondary school, and this class is meant for the senior secondary school 3, the final year students preparing for their West African Examination Council exams as well as the National Examination Council exams. For some time now, we are on revision, and we have looked at so many questions from the topics that we have treated from the senior secondary school 1 up to the moment. So today we like to look at another topic, which is the accounts of non-profit making organizations. In that aspect, we'll be looking at how to prepare subscription accounts, statements of affairs of a non-profit making organization, income and expenditure accounts, as well as the balance sheet of a non-profit making organization. And to do justice to that, we need to look at an illustration. We need to look at an illustration on preparation of subscription accounts, statement of affairs of a non-profit making organization, income and expenditure account, as well as the balance sheet. Without wasting our time, let's quickly look at the question and how the question can be solved. Question: the following is the receipt and payment of Account Ss3 Social Club for the year ended 31st December 2014. We have the debit and credit side of the receipt and payment account for the year ended 31st December 2014, and we have the denomination, which is still naira, and on the debit side of the receipt and payment, we have the cash in hand as at the 1st of January 2014, which stood at 500 naira. The cash at bank as at 1st January 2014, that one was 1000 naira. And we have subscriptions collected during the year, and the subscription, we have that of 2013 collected 1200 naira, and that of 2014 collected amounted to 4000 naira, and we have subscription for 2015 collected also, which amounted to 2300 naira, and the total subscription amounted to 7500 as the cash subscription collected during the year 2014. We have donation of 2000 naira, and amount realized from the end of the year show was 15,000 naira, and we have the transfer from a deposit account of 3,000 naira. So the total of the debit side of our receipt and payment account stood at 29,000 naira. More so, we have the expenditure for the time, that is the cash expenses made during the time, as stated in our receipt and payment account. We have the purchase of sports equipment, which stood at 1800 naira. We have repairs, the amount spent on repairs, which stood at 1500 naira. The amount of salaries paid, 1,700 naira. Amount of insurance premium paid 1,000 naira. And the amount spent on shoe, yes, shoe expenses, 3,200 naira. We have the transport expenses, which amounted to 500 naira. We have secretarial expenses, which stood at 300 naira. Purchase of furniture, that means furniture was purchased during the year, 3,000 naira. And we have the balance of cash as at end of the time, which stood at 16,000 naira. And the total of the credit side of our receipt and payment stood at 29,000 naira, which equals to that of the debit side. More so, we have the additional information, and additional informations are: number one, the equipment was valued at 3,250 naira, and furniture valued at 1,550 naira on 31st December 2013. That is, the value of the equipment as at the end of the 2013 was 3,250 for equipment and 1,550 naira for furniture. And we were informed that depreciation to be provided as follows: depreciation on equipment 505 naira, and that of furniture 55 naira. The following expenses were outstanding, that is, the amount that are expected to have been paid, which are yet to be paid as at the time the account was being prepared, were salaries of 300 naira, transport of 100 naira, and repairs of 250 naira. The subscription owing by members were as follows: that is, the subscription that were yet to be paid as at the end of an accounting period were as follows. We have the one that was yet to be paid as at the end of 2013, which stood at 1,200 naira, and the one that is yet to be paid as at the end of this current account period of 2014 stood at 2,100 naira. The balance in the bank deposit account at 31st December 2013 was 300 naira, so the cash at the bank stood at 300 naira. Now, you are required to prepare statement of affairs as at 31st December 2013, subscription account for the year ended 31st December 2014, and income and expenditure account for the year ended 31st December 2014, as well as the balance sheet as at 31st December 2014. As we can see, we are required to prepare 4 major accounts: the statement of affairs as at 31st December 2013, that will be the opening statement of affairs, that is, as at the beginning of this year 2014, we have to prepare the statement of affairs. Then we are required to prepare the subscription account also for year 2014, as well as the income and expenditure account and the balance sheet for the year 2014. Without wasting much of our time, let us look at how to prepare the accounts as required by the question. From the question, the name of the social club was Akande, therefore the heading will be Akande Social Club. And as the first to be prepared, statement of affairs as at 31st December 2013. When preparing the statement of affairs as at beginning of the year, the things that we need to note is that we have to bring out all the fixed assets as at the beginning of the year, the current assets as at the beginning of the year, the liabilities as at the beginning of the year. All these things need to be used in preparation of statement of affairs in order to determine the accumulated fund for the beginning of the as at the beginning of the year. And as I had informed you before, that accumulated fund simply means the capital of a non-profit making organization. Therefore, let's look at how to prepare the statement of affairs. As at the beginning of the year, we have the fixed assets such as equipment, which value stood at 3,250 from the first information on our additional information, and we have the furniture from that same information, additional information number 1, which stood at 1,550 naira. Those were the two fixed assets mentioned in the question, and you add it together, we have the total of 4,800 naira for as our fixed assets. From there, as at the beginning of the year, from the information number 3 in the additional information, from the information number 4 from the additional information, we have subscription as at 31st December 2013 from number 4 additional information. Subscription owing as at 2013, we had it stood at 1,200 naira. So that's the first current asset that we have. The subscription owing as at the end of the last year, which is supposed to be paid as at last year, it becomes part of the current asset for today as at the beginning of the year. So we have it as stood at 1,200. We have the bank deposit. That is the amount stated that was paid into the bank. We have the bank deposit. That is in the question number, additional information number 5. We have the balance in the bank deposit account as at 31st December 2013, which stood at 3,000 naira. Then we have the opening cash in hand of 500 naira. That one is stated in the receipt and payment account. The first information in the receipt and payment account of 500 naira. Then we have the cash at bank as at the beginning of the year 2014, which stood at 1,000 naira in our receipt and payment account. All these items are summed together because they are the current asset as at the beginning of the year. So we have subscription owing of 1,200, bank deposits of 3,000 naira, and cash in hand of 500 naira, as well as the cash at bank of 1,000 naira, all totaling 5,700 naira. So by adding the current asset to the fixed assets, which stood at 4,800 naira, we had 10,500 naira as the total of the right hand side of our statement of affairs, that is the asset side. We have the total of 10,500 500 naira. Critically looking at the question, we will realize that as at the beginning of the year, there was no liability. So since there was neither long term or current liability on the other side of the in the question for as at the beginning of the year, therefore the total amount of our fixed asset, which stood at 10,500, will be used as the accumulated fund, since we don't have any liability. Therefore the amount of 10,000 naira 10,500 naira that we realized as the total assets of the as at the beginning of the year will be the accumulated fund. Therefore our accumulated fund is 10,500 naira. That is stated on the left hand side of the statement of affairs. Therefore we have the total of 10,500 on both sides. That's how to prepare the statement of affairs as at 31st December 2013, which is almost the statement of affairs at the beginning of 2014. From there, the second question that we are asked is to prepare the subscription account for the club as at the end of 2014, that is the 31st December 2014. So for us to prepare that, that's B, Account Ss3 Social Club. We have to have the debit and credit side of the subscription account for the year ended 31st December 2014. Now, subscription account. We have the to prepare the subscription account, and what we are going to do there is that we are going to, since subscription account is an income account, it always have the credit balance. Therefore, we go back to our receipts and payment account. The amount realized from subscription for the year 2014 stood at 7,500 naira. So since the receipt and payment was debited, then the subscription account will be credited with 7,500 naira. That's the first item on the subscription account. Then on the debit side of the subscription account, we have the balance brought forward of 1,200 naira. That was the subscription for last year, which was being owed by some members, which was being owed by some members, and as stated in the number 4 of our additional information, which says that subscription owing by members were as follows: 31st December 2013, 1,200. So that's balance of brought forward of the subscription, 1,200. Then we have the subscription owing as at the end of the 2014, which also stood at 2,100. So the amount that have been collected as cash, which stood at 7,500, plus subscription owing by members for 2014, which is yet to be paid at the time the account is being prepared, which stood at 2,100, is going to be added to the amount that have been collected in the receipts and payment account. So by adding that, you have 9,600. From that 9,600, you are going to deduct the amount owing by the members in 2013, because that 2013 amount does not mean for 2014. And the reason for preparing the subscription account is to determine the exact amount of subscription which was due for 2014. Therefore, by adding the total amount as that was collected as cash of 7,500 to the 2,100 that is yet to be collected in 2014, we have 9,600. From there, you have to deduct the balance brought forward, that is the 1,200 which was meant for last year, which was owing as at the end of 2013, 1,200. So you deduct it from 9,600, you have 8,400. You have 8,400. From that 8,400, there's a statement which stated that the subscription prepaid for 2015, that's the one is stated in the receipt and payment account, in front of which we have 2,300 in front of 2015. That, since that 2015 is the next accounting year, that is a prepayment for next year, but the amount has been collected in 2014 and it's not meant for 2014, it's meant for 2015. So that 2,300 will now be deducted from 8,400 that we have before. Then we will be having 6,100, which is the amount that will be transferred to the income and expenditure account, which will be the amount that is going to be transferred to income and expenditure account, 6,100. Let me quickly re-explain that aspect. We have the total cash receipts from our receipts and payments account, which stood at 7,500 naira. Then the subscription owing for 2014, that is the one that is yet to be received from the members as at the end of the 2014, stood at 2,100. By adding that 2,100 to 7,500 that was the cash receipt for the subscription for in 2014, then we have 9,600 naira. Then from this total of 9,600 naira, we have to deduct the amount meant for 2013, that is the subscription that was not paid in 2013, which was later paid in 2014. You have to deduct 1,200 from 9,600. We have 8,000. We have 8,400 naira. From that 8,400 naira, you have to deduct the prepayment, that is the subscription that has been paid by some members for 2015 as stated in our receipts and payments account. So by deducting 2,300 from the remaining 8,400 naira, you are going to be having 6,100, which is stated in our subscription account as income and expenditure account on the debit side of our subscription account, 6,100. That 6,100 will be the amount that is going to be charged for as the subscription for the year 2014 in our income and expenditure account. So that's how to prepare the subscription account. Therefore, we have balance brought forward of 1,200 on the debit side. We have income and expenditure account of 6,100 as determined with the way I explained it. Then we have the balance carried down, which is the prepayment for the next year. So we have the total of 9,600. So the prepayment for the next year will become balance brought forward for the next year, which, and since we know that subscription account is an income account, it will be credited to the account. That's why we have balance carried down of 2,3 and balance brought down of 2,3. Then we have the receipts and payments account, that is the total cash received for subscription for the year of 7,500. Then we have the balance carried down, that is the subscription that for 2014 that is yet to be received, which stood at 2,100, and that will be debited to the income and to the subscription account. That will be debited to the subscription account because it's a liability, because it's an asset to the business, because it's an asset to the club. Therefore, it is debited to the subscription account. So that's how to prepare sufficient account. From there, we now have to prepare our income and expenditure account. From there, we now have to prepare our income and expenditure account. So Account Ss3 Social Club, that's the name of the business of the club. We have debit side and credit side, and we have the heading income and expenditure account for the year ended 31st December 2014. Then we have the denomination naira. Now, income and expenditure account is a nominal account which takes into consideration both the accruals and the payment. So we have on the debit side the expenses, because it's an equivalent of the profit and loss account of a profit making organization. So on the debit side, we are going to be having the expenditures or expenses. Then we have on the credit side the income of to the club. So on the credit side, we have the subscription of 6,100 naira, which was due for the year 2014 as calculated from the subscription account. 6,100 for subscription account. We have donations from people for the club, 2,000 naira. Then we have amount realized from end of the year show, which was 15,000 naira. So the total of the debit of the income side of our income and expenditure account stood at 23,100 naira. Now on the expenditure aspect, that is the expenses side, we have repairs. The amount paid for repairs from our receipts and payments account was 1,500, and from the additional information we were told that 250 naira was still owing by the club as at the end of the year. So we have to add 1,500 to the 250 naira still owing. So the total amount for repairs for the year was 1,750 naira. So also salary amount paid was from our receipts and payments 1,700 naira plus 300 naira owing. That is stated in our additional information 3. So 300 naira owing, we had it to 1,700 naira paid in receipt and payment. Then we have 2,000 naira as salary. Then transport expenses, the same thing applies to it, as we have 500 naira paid from receipt and payments account. Then we have 100 naira still owing from the additional information number 3. So we have 600 naira as the value for the transport expenses, 600 naira. Then we have insurance. As paid in the receipt and payment account, which stood at 1,000 naira. Show expenses 3,200 naira, and secretarial expenses 300 naira. So by totaling that, then we have the depreciation to be charged for the year, and as stated in the information number 2, additional information number 2, our depreciation stood at equipment 505 naira and furniture 55 naira. So all these expenditure items totaled 9,410 naira. 9,410 naira. So since our income side, which is the credit side, is greater than the debit side, which is the expenses side, we have to deduct the total of the expenditure 9,410 naira from the total of the income, which stood at 23,100 naira. Then we have the difference of 13,690 naira. 13,690 naira, and that is the surplus for the club. So the club makes surplus of 13,690 naira. Then we close the account by having the total of 23,100 on both the debit and credit side of the income and expenditure account. From there, the question still requires us to prepare the final balance sheet as at the end of the 2014. As at the end of 2014, the question still requires us to prepare the balance sheet for Account Social Club. Therefore, we have Account Social Club balance sheet as at 31st December 2014. So let's start with the right hand side of our balance sheet. We have the fixed assets and equipment which totaled 5,050 naira, less depreciation of 505 naira. We have the net book value of our equipment which stood at 4,545 naira. Then furniture stood at we need to remember that during the year we bought sports equipment for 1,800, and the value of the equipment as at the end of the 2013 was 3,250. So plus the one bought in the year 2014, which stood at 1,800 naira. That's why the total of equipment stood at 5,050 naira. So we need to add the new one that was just bought in 2014 to the one that you have as at the end of the 2013, which was stated in additional information 1. Then you less the depreciation, which was stated in additional information 2, 505 naira. So we have 4,545 naira as the net book value of our equipment. The same thing applies to furniture. In the case of the furniture, we have the furniture bought in the receipt and payment account 3,000 naira to be added to the furniture that we have in information number, additional information number 1, which stood at 1,550 naira. So 3,000 naira plus 1,550 naira, you have the total furniture of 4,550 naira. Then you less the depreciation of 55 naira. So you have the net book value of 4,495 naira. So by adding the net book value of furniture to that of equipment, we have the assets, the net book value of our assets as the 9,040 naira. The total value of our fixed assets now stood at 9,040 naira. From there, we have the current assets. What are the current assets that we have? We have the subscription owing as at the end of 2014, that is the one that is yet to be paid by members as at the end of 2014, which stood at 2,100 naira. Then we have the amount in the balance of the our receipt and payment account, the cash balance in our receipt and payment account, or we may call it the bank balance of our receipt and payment account, which stood at 16,000 naira. So by adding 16,000 naira to 2,100 for subscription owing, we have 18,100 naira as our current assets. So adding that figure of current asset of 18,100 to the value of our fixed asset of 9,040 naira, we have the total asset value of 27,140 naira. So from the asset side, let's now analyze the liability side, or what we can call the capital side, the left hand side of our balance sheet. So in that case, we have the accumulated fund as calculated in the beginning, the statement of affairs that was prepared at the beginning of this illustration. We have the accumulated fund, which is almost the same thing as the capital of a profit-making organization, which stood at 10,500 naira. Then we have the balance of our income and expenditure account, the surplus derived from the income and expenditure account, and since the surplus, you have to add it to the accumulated fund. So we had surplus of 13,690 naira to the accumulated fund of 10,500 naira. So we have the total of 24,190 naira as our capital employed, if you can want to say so. Then we have the current liabilities of subscription 2,300 naira, that is the subscription, the prepayment, the subscription paid for 2015 by some members, the amount the subscription paid in advance for 2015 by some members 2,300. We have the repairs that is yet to be paid 250 naira, salary owing of 300 naira. We have the transport expenses owing of 100 naira. So all these are the current liabilities, which total 2,950 naira. So by adding the value, the 2,950 naira, which is the value of our current liabilities, to the value of our accumulated fund plus plus our surplus, which stood at 24,190. So by adding the 24,190 to 2,950 naira, we have 27,140 naira. Therefore, our book is balanced. Then we have on the debit side, 27,140, and on we have on the right hand side 27,140 naira, as well as on the left hand side of 27,140 naira. So for both sides we are having 27,140 naira, which shows that our balance sheet is balanced. So that's an illustration on how to prepare subscription account, statement of affairs, income and expenditure account, as well as the balance sheet for a non-profit making organization. Assalamu alaikum wa rahmatullahi wa barakatuh.